Anthony, thank you so much for joining us today. This is episode 18 of Cashed In, and you are what? A tax expert, a CPA, investment advisor.
There you go. Hi, Anna. Thank you for having me.
Of course.
It's exciting to be here with
Thanks
you
for
both,
being here.
really. And I'm more of an entrepreneur than anything else, but I started my career really as a certified public accountant. I have a master's degree in taxation, and I'm a registered investment advisor. Today, I'm even more than that. I'm an author. I just finished my first book, which is going to be published and come into the market this fall, maybe winter.
Very cool.
Which is very, very exciting, and I'm thrilled about.
What's it called?
The name of my book is Red Hurricane,
Okay.
and in the arc of the story really starts on October 31st, 1987, when I was preparing for a Pop Warner Championship football game to be played at Taggart Stadium in Newcastle. Well, that day I was caught on fire. And what happened is I never made it to the football field, but I was burned over 87% of my body.
Oh, my God.
Third-degree burns, where I lost my left hand and was faced with some of the largest tragedy that I could have ever imagined. The arc of the story really goes from that day and details the time that I had in the hospital, what my parents went through, near brushes with death, all the way through a tremendous survival, physical rehabilitation, and then making it back onto the football field at the end of my high school career as a starting outside linebacker for the Newcastle Red Hurricanes.
Wow.
So that's the real story. But what that story really did is it led me here. It led me to my career. It taught me how to identify and overcome problems and adversity. And I use that now in my business practice, investment advisory practice, the way that I work with other people, and it's just been a wonderful thing.
Wow, that sounds incredible. I'll have to get it when it comes out.
Yeah, for sure. I'll definitely make sure you have a copy.
Yeah, so Michael here, I think he knows you pretty well. You guys have
Just
the
a little
same last name.
Yeah.
So I kind of let him take the reins from here with questions and things like that.
So, obviously I know your story, just as well as anyone, but every single time I hear it, I think that it's inspiring. I mean, it's just a roller coaster of emotions, right? But one of the things that I always try to preach, on this podcast is just about mindset, not being bound by your circumstance. And, quite frankly, 99.9% of people, that walk on this planet, they're not going to have to experience what you went through, right? They experience different things, right? But whether you want to call it a shortcoming or a perceived shortcoming, right? I would argue that people, and you're living proof of this, are not bound by their circumstances, right? You just got done saying about how you got back onto the football field despite, and I'll let you touch base on this, but despite what medical experts said, right? You were starting outside linebacker. You've won golf tournaments. You've gone on to, achieve, many things in business. You have a great book of business. I mean, you've lived a very full life. I know that you're a proud father as well, to two wonderful kids. So, what would you say to those people, that feel like, what, this is the hand that I was dealt, and this is, it is what it is. This is the life that I have to live. Because this is what, God had in store for me?
Well, that's a great question and a great topic of discussion, really. See, and the way that I evaluate and look at life is all life really is a series of situations where we have to solve a problem to overcome an adversity. And sometimes they're very clear. These problems we have. You were hit with a medical illness, or you were in an accident, or and sometimes they're your fault. And then there's other occasions where they're not your fault. You just had bad parents, or you just you lost your job because of a bad economy, or someone did something to you that they just shouldn't have. But the bottom line is how you respond to these events determine not only the outcome of that situation, but it determines where you're going to go forever. See, in business, we look at situations where we can solve problems for other people and we get paid for them. But how do we learn how to be a go-to person, an advocate, or somebody that can influence others if we don't know how to deal and overcome with our our own challenges in life. See, and that's why I think the accident that I went through was such a blessing, because I was faced with such dire consequences. Where certain things were out of my control. Mm-hmm. And I wish I could look at this and say, hey guys, look, I was just incredibly strong, or I was incredibly this or that, but I wasn't. I was just this person, this child who was faced with a tremendous tragedy. And I had no other control than to just lay on the bed and let people take care of me, to the point where I had to survive. There had to be faith in God, and there had to be trust in my parents' eyes, and there had to be these many beautiful things that would happen through the doctors and the nurses who were caring for me. So sometimes in life, when you're faced with adversity, you have to realize that it's not all about you. Mm-hmm. Sometimes you just have to sit still and let that adversity pass while others are caring for you, trusting in God's blessing, trusting that the sun's going to come up tomorrow. So the first thing that I would say is, if you had a misstep in your life, or you were faced with something that you never thought you can overcome, sometimes you just have to be still and let that pass. And while it's passing, you have to endure, because there's going to be suffering and pain. But eventually you're going to be back on your feet, and you have to have a clear mind and a clear eye as to how you want to move forward in your life. So just trust in tomorrow. That would be the first thing that I would say.
I have chills. I think that, like I said, I can't relate, but I obviously know, the stories, about that. And I think that, we come from a town, and we refer to Newcastle quite a bit.
Yeah.
I think that Newcastle has made me, who I am today, despite the many shortcomings, that there is, but every town has that.
Every town has it.
But the community that, came behind you, obviously your family, your friends, the community that came behind you, I'm sure that played, a big role as well, the church, and I think that, it kind of plays hand in hand with business, because, who you're around and the people that you're around. So for example, your friends, right? How are your friends after your incident? Were they supportive of you? Like, were they, what were those interactions like?
Well, this is what's so interesting. Everybody loves you when you're down.
Of course.
This is the truth.
Because you're not better than them.
Because you're not better than them.
In that moment,
when you're faced with adversity, that it's not of your own doing or what have you, but when you're faced with adversity, you're in an accident. Everybody is there pouring out their love and emotion for you. What's interesting is, Taggart Stadium for us, for kids who grew up in Newcastle, it was hallowed ground. Okay. Mm-hmm. It was a place where if you had a chance to play under the lights at that stadium, it was amazing. Mm-hmm. Well, the night of my accident, everyone was gathered there for these games, but there were tears flowing from the same stadium that heard, your dad and Uncle Rick and many people in our family and our name shouted out over the loudspeakers for making plays. This day they announced my accident, and the town was just so tight knit. They thought I had died. I mean, honestly, I was burned from my neck to my ankles.
They said you were going to.
They said I was. There was even rumors.
What was
that
the quote?
I had died.
What they say? They said if it's not days.
They said if I lived for a day, I would die in 3 days. If I lived for 3 days, I would die in 3 weeks of infection. And it was really close.
Oh my God, I got chills from that.
So essentially, those people at that stadium, they left in light of this terrible tragedy and filed into St. Vitus Church, where we grew up as members, and had an impromptu rosary service, and they prayed together. Some of them may have prayed for me to survive. Some of them may have prayed for me to find peace in some other way and for God's will. But I believe, in my book, I say that it was the prayers of the faithful who opened up the eyes of the Almighty to save me in that accident. There were people who just went, and there was so much and that's beautiful. The way the community responded to me, and was there, and I believe in that. I believe that they were really heard.
That's incredible.
So you led with people care about you when you're down.
Yeah.
Which to me that implies that there was a turn. Yeah. Obviously, you're not down anymore. So what happened after you weren't down anymore?
Well, it's not that they don't. It's not really that people will turn on. It's that you look
Less
at somebody,
support.
You look at somebody and you say, okay, this person was injured in this fashion.
Yeah,
And now it's just a blessing for them to be alive.
absolutely.
So you then draw a caricature in your mind of what that person's life is supposed to be.
Right, like what's my
Right.
purpose? Obviously, I was spared.
Yeah.
So what am I going to go off and do? How am I going to impact this world or my life or somebody else's in a positive way? And how did I get there?
Exactly. And so now someone will look at that situation and will say, okay, you're surviving. That's your blessing from God. Now go play Nintendo in your parents' basement, and that's
Right.
it.
They wrote the story for you.
That's what they.
Yeah.
That's what. Just like someone wrote the outcome that I was going to die.
Mm-hmm.
Just like somebody wrote the outcome that now that he survived, he's not going to have a normal life.
I feel like people do that because they can't just handle that it's not written yet.
Mm-hmm.
They have to compartmentalize and say and already deem you your future.
Right. Oh, and that's what happens. And believe me, it will happen if it has not already with you, and it will happen with you as well.
Yeah.
So what happens is then people look at you and they say, well, who do they think they are that they're going to college? Who do they think they are that they're married with? Who do they think they are starting a business? Because then at times, as much as people love you,
Mm-hmm.
they start to compare themselves to you
Mm-hmm.
or look at them or define themselves in, and that's not a good trait for anyone to have.
No, it's a reflection of them.
Yeah.
I love that question. Who do you think you are?
Yeah.
And then Kanye West always goes, I just told you who I thought I
I
was.
just told you.
That's my favorite one.
No, but for the most part, people have been great in life. The community in Newcastle have always been fantastic. I've been very fortunate to have a great, loving, supporting family around me. And I've been very able to help people. And
that's
really,
the biggest, like, to me, that's like the most fulfilling thing is there's a quote that goes, if you have the ability, you have the responsibility.
Yeah.
So if you're able to bless somebody else with either mentorship or time or knowledge or funds or whatever, like that to me is the biggest blessing that you could feel for yourself.
And I'm a firm believer in that, Anna, that essentially if you're not giving a great part of your life, your heart, your effort to somebody else and not in exchange for $1.
Right.
But if you're not giving and pouring into other people, then you can never be happy. You may be wealthy, but I don't believe you'll ever be happy.
Yeah.
Right.
It's a different feeling.
Yeah.
How old were you in 1987?
I was 12.
You were 12 years old.
I was 12.
Okay. And how did this happen?
I was in the garage. My friends and I, basically, it was the day of our Pop Warner championship ball game. And, we were walking from my buddy's house to my mom's house. There was kids playing on quad motorbikes in the woods. They were sniffing gasoline out of the quad motorbikes and invited us to do the same thing. It's not something that we had ever done before or ever did again, obviously. But we did that there and walked up to my house where there were no parents. My friend and I went into my garage, did the same thing, sniffing gasoline. A match was lit. I caught on fire.
Were you the only one that was burned?
Yeah.
Oh
He
my
had
God.
my buddy, who I love, had minor burns on him. And then the gentleman who put me out had some minor burns, but nothing compared to the 87% body burns that I had.
Holy crap. Mm-hmm. I remember this. I think you came, not the event, but you came and spoke about this at school.
Okay.
Because I went to Newcastle.
Okay.
So I think I remember you being, I think it was Mr. Mantoneas' class or somebody's class.
Maybe, yeah.
Yeah. That would have been 2006 or 7. But
Yeah.
you spoke about it.
I've been doing it for years.
Yeah.
Honestly, ever since the accident. When I was injured, it was before a time where they had, where you could get, or something like blew up on social media.
Mm-hmm.
Yeah, there weren't GoFundMes. There wasn't Facebook. There
Yeah.
wasn't,
It was word of mouth. Yeah.
still on Oprah.
But I was on Sally Jesse Raphael was a big
What?
syndicated TV
I used to watch
show
Sally
then.
all the time.
Yeah, I was on Good Morning America.
No way.
In the USA Today when I was released from the hospital, my story was It was a big thing then.
Yeah.
You know, so.
Did you have any like near-death experiences?
Oh,
like
several.
supernatural ones?
Well, you know, I had some very, very, very
Enlightening visions?
well, you know, I was certainly touched by God, and I will tell you that. And it was amazing. And some of the things that happened to me are truly beyond, you know, what you can describe in this world. But, you know, I will tell you that you can have faith in God, and you can understand that God is real and that miracles do happen. And being able to be on fire and not feel the pain of the flames. And being able to, I was given my last rites 3 times. I had 134 blood transfusions. That's the equivalent of 17 bodies full of blood. I had a full body skin transplant of cadaver skin. The first person or the only person I know of in the world who ever had that done. So there was medical miracles. There was spiritual involvement. There was, you know, people who prayed in such powerful ways and that they spoke in tongues. There was my life was touched.
Do you ever feel like imposter syndrome where you feel guilty?
You know, you go through a host of emotions.
Yeah.
In writing this book, I spent so many hours in tears, you'd never believe it. Tears for what I went through, tears for what my parents went through, tears for what my brother went through.
You were a child, 12 years old.
Yeah, it was hard though, you know, because you see, I spent days in my bed where people were coming in and they were able to come in. My mom or dad would be sitting next to me and one guest at a time. And when they sat there and talked to me, it was like they were at my casket, like they were telling me their last goodbyes.
Wow.
And I was like lightly conscious, and I can hear people telling me I was a good boy, you know, and it, you know, that just listening to that, and just they had to put a sign behind my bed that said, "He can hear and understand you," because my heart would race when I heard certain things, you know. So there's these visuals in these times that I can remember that it's just, it's almost like, how did that even happen? Like, how was that even real?
Yeah.
And now I'm here and I just love being a dad so much. My daughter's 20 years old and my son is 10. And, you know, it's just such a wonderful experience to think that, wow, I was through that. And now I'm here with these 2 beautiful people and living this life with. Yeah, I'm really proud of it. I'm really thankful for it more than anything else. Yeah,
absolutely. So that's awesome. And obviously, we'll save the rest of it for the book.
Yeah,
you know, you got to make people go out there and get it. So how does that lead into your professional life? So obviously, I'm drawing this conclusion like you obviously came close to death. So I had a stint too where I was in the hospital for 6 days because I almost went septic. My kidneys were infected.
Oh my.
So I thought to myself, I'm not going to let myself be bound by certain things. It kind of changed my mindset where I tried to become like a serial entrepreneur myself. And I assume going through that, you know, that trial and tribulation, you might attest to, I'm going to try and experiment, see what I'm good at, and I'm going to go after everything.
Well, that's interesting. I think that for a long time in my life, I was trying to figure out why. Like, why did this happen to me? And then I was trying to do things to justify this I was trying to recreate the success of walking out of that hospital or recreate
and ending up on the field, and it's like, I did this. Yeah.
Because it was just such an experience. So yeah, you're looking for why. So when I was in college, I went to see a friend of mine who's an attorney named Angelo Pepa. Okay.
I've heard of him.
Angelo's a great dude.
Yeah.
Okay. And I was studying business law at Robert Morris University. And when I went to see Angelo, I was doing a paper on a lawyer, literally. He recruited me and got me into this sales job. And the next thing I knew, we were traveling all over the country and going to motivational seminars and really trying to build our psychology in the sales and marketing department. I got into listening to Anthony Robbins and I got into listening to Zig Ziglar and reading books like Think and Grow Rich by Napoleon Hill. And it really, I was a 21 or 22-year-old kid, but I was seeking these, this mentorship in a way to kind of figure out, why did I go through all of this? But in the process, I ended up realizing that there isn't a reason that something like this happens, but there is a process for overcoming. And that process, you don't have control of it. You don't have control of whether I'm going to heal in a week or a day, or it's going to take me 40 or 50 years. And you don't have control on necessarily certain things that are going to manifest and come out of the healing process. So it's a lifetime journey, so to speak. So basically studying that and studying that process, it got me really into entrepreneurial business. I loved it. I loved the fact that I could listen to Zig Ziglar's about the sales process, and then implement that, and then see the psychology, the emotional intelligence that I actually had to use as a 12-year-old, and connect the dots between business and getting back on the ball field. So I love that. That changed my life, and I incorporate that mindset in my business every day.
Yeah, it's definitely crucial when it comes to being brave enough to take another step and bet on yourself, because obviously overcoming, the incident and then going on a field is a huge, they don't see the healing process, the day-to-day. That's years of relentless, I'm going to get over this.
Right.
Yeah, it came to your minds at that point, like you're 16, 17, you're getting into your junior, senior year. Prior to that, though, I'm assuming, that there was just probably, you had to endure still a lot of pain at that point. Then you're putting your helmet on, pads, all of that, and so mentally that had to just be, I couldn't imagine, what that had to be like.
Well, and there's another side to it too. The other side to it is, I never wanted anyone to feel bad for me. So, and I never wanted to be treated like I was different. Okay. So you develop these psychological and almost like these personality where somebody tries to feel bad for you, I became defensive. I was never, if somebody tried to do something to show me sympathy, I would become defensive. And I think back on those days, and I understand it more now. I have a better understanding of it now, because I just didn't want to be different. I was in denial. Okay. I spent my time, in denial. I wasn't accepting my circumstance. So a lot of what I went through and overcoming had to do with the fact that I wasn't going to take this definition of me as being somebody who is disabled and who can't.
Right.
Even though now I'm happy, I have a disability. I lost my hand. I have limitations, but I can.
Right.
Okay. And that's what the thing about it is. Yeah, sure. Is life going to be a little more difficult now? But guess what? When it came to being on the football field, when somebody wanted to feel bad for me, the first time you put your helmet in their chest, the next time around, they're not going to do it anymore.
Yeah, they're not feeling bad next time.
They're not.
Yeah.
And so that was part of it. That was a big deal.
Yeah. So you do a lot of, obviously you do, under your Razzano Consulting umbrella, right? So I know you're a licensed NFL agent. You do, you create investment portfolios for individuals. You do a lot of tax returns. You also do a lot of business consulting, right?
Well,
you do some of that as well. So you're the epitome, quite frankly, of you're helping others as well. You're serving others, trying to help them achieve their dreams, whether it's, putting them in a certain investment product, or you're helping them get through a storm, as it relates to their business, right? And as it relates to, mostly what we talk about on the podcast, there's the real estate, the real estate portion of that. Sure. Now, I think that you actually created my first LLC for my first property, years ago. Nice. And at the time I had no idea what I was doing. I know that we had a lot of conversations around that. So how do you view real estate, in terms of just being a vehicle to financial freedom, growing wealth? Obviously we'll get down into more granular levels as it relates to the IRS tax code, but
I can't wait to talk about that.
Yeah.
I love write-offs.
Yeah.
So where do you view it? And especially as it relates to some of your clients that you have, some of your, the top clients you have, is real estate a portion of their portfolio?
Oh, sure. So real estate is fundamentally, the secret in America, the secret in American wealth. The secret of American wealth is 90% or more, of people's wealth, of wealthy individuals' wealth, are tied up in their real estate. So essentially, your wealth is directly linked to your real estate. That is a fundamental factor. It's been in this country for a long time. Okay. So as it relates to the everyday individual, you're going to have some people who are just who are homeowners. Okay. You have some people who are investors. You're going to have other people who really go into real estate as a profession. Let's talk about the everyday person, the everyday guy. Okay. I'm going to make a statement here that is really important for everyone. And it's this: if making a gain on the sale of your personal residence is not a fundamental factor in your wealth creation plan, then you are guaranteed working with the wrong advisors. Because you can own a personal residence. Okay, you live there and you use it. If you own it for 5 years and you live there for the previous 2, you can sell that personal residence at a gain as an individual up to $250,000, as a married couple up to $500,000 of a gain, of a profit. And it is excluded from income tax. So in this market, if you bought your primary residence in 2017 for $200,000, round number, and the market has that home now worth $400,000, you could sell that house for $400,000, put $200 in your pocket, tax-free, and go and buy another home. And you can do that every 5 years.
Right.
So if you're not thinking that way, our grandparents' generation, they bought their home. They lived there for the duration of their lives. That was their homestead for their family. But because of the way the tax code is written today, you can shelter income or wealth every 5 years and gain more money than you may ever in your 401k, retirement savings, or whatever. And that's just for the everyday individual.
So now, are you able to rent? Are you able to rent over the course of that 5 years as long as you lived in it for 2? Or how's that work?
Well, that's a good question. And the point is that you have to live in the house for 2 of the previous 5 years. Okay. Now, when you get into a situation of creating an income producing property, it could be a little more complicated. But the fact of the matter is that there is no gain. So it could adjust your basis, for example.
Yeah.
So let's say that you began to depreciate that property that you bought for $200,000, and now you depreciate it for 3 years and had some improvements. Now your basis might only be $100,000.
Right.
So when you sold it for $4, you had a $300,000 gain rather than a $200,000 gain. So it does get complicated.
Can we zoom in on that, on depreciation? How is that calculated?
Yeah, how do you recapture it, right? So like even on an investment sale, you have to if you took $50,000, I'll let you go with it.
Okay, so depreciation on a real estate transaction is very I wish that I could say that it was black and white, but it's not always. Okay,
it's convoluted in my mind. I don't really understand that concept.
Okay. Depreciation, another way to put it, is cost recovery. Okay. So let's say you bought a piece of real estate for $100,000. Okay. If that real estate is something that you're going to have used for a business purpose, rental real estate, commercial real estate. If it's residential rental property, you have to recover that cost over 27 and a half years. If it is commercial rental property, you have to recover that cost over 39 years. Now, here's where it gets interesting. What is considered real estate in what is considered personal property, because real estate can be defined as the land, the foundation, the structure, the roof, and the parts that go into that real estate, like the electrical. They may not have useful lives over the depreciation period. Mm-hmm. So who's to say that my electrical system is going to live in this commercial building for 39 years? If I can only recover the cost over 39 years, I may have multiple electrical systems over that time. So the IRS allows you to break out certain component parts of your commercial real estate and depreciate them over as personal property over an accelerated period. Okay, so it's very complicated tax matter. But what you need to know is that the real estate, if it's commercial in nature, the building can depreciate over 39 years. Personal property, typically over 5 or 15 years.
When you say depreciate, is that a fixed number that you're able to write off per year?
It could be. So it depends on whether you use straight line depreciation. If you're doing straight line, you're taking your $100,000 and you're dividing it by 39, and you're taking 1/39th every year for 39 years.
I understand. Okay, got it. That makes sense.
If it is modified accelerated cost recovery, then it's through a different chart that is published by the IRS, where you may be able to take 50% of certain property all in 1 year and then depreciate it evenly over the remainder of the time.
Okay, so if I sell that $100,000 property with a 50% depreciation, do I have to recapture that when I go to sell it the next year?
Yes. So essentially, now let's go through the math. Okay, you take a $100,000 piece of property, you depreciated, you took a cost of $50,000 on it. Now your basis is $50. Mm-hmm. Now you sell it for $150. So because you got a deduction at your ordinary income tax rates, okay, from the $100,000 to the $50,000, when you pick up the $150,000 sell, you have to pick up ordinary income, which is called depreciation recapture, from 50 to 100. Now, then you have capital gain income from 100 to 150, but it's taxed at a special rate rather than 5 or 15%, okay, which is normal capital gain. It'll be taxed at a 25% rate for gain on a real estate transaction.
So to avoid that, do you exchange it?
1031?
It depends, okay? Now, here's what it depends on. If you believe tax rates are going to be higher in the future than they are today, then I want to pay today's tax rates.
Yeah, that's a good point.
If you believe that tax rates in the future are going to be less than they are today, then I want to exchange and upgrade. So these are professional decisions so that you have to look at and you have to make judgments, because here's what I wouldn't want to have happen. Let's say I bought a property at $50,000, I sold it at $100,000. And let's say I could make a $50,000 gain on that, okay? I make the $50,000 gain, round numbers, 25%, let's say $12,500 federal taxes. Okay, boom, I paid that. Now, let's say on another exchange, I did not pay taxes. I just rolled that 50, and I took that $100,000 buying power, and I bought something for $100,000, and now I sell it 5 years from now for $200,000. Now I had the $50,000 gain from my first and the $100,000 gain from my second. That's $150,000. Mm-hmm. But what if I make $200,000 of income now? So now,
higher tax bracket.
Yeah.
Now I have $250,000 of income, or $200,000 in my real life, and now I have to pay a gain of $100,000 on the second half of the transaction. But oh, by the way, I got to pay on the 50.
Yeah.
You see what I mean? That I could have paid
in addition to that. I may not have been in such a high tax bracket when I did that original transaction 5 years or 7 years or 8 years before. I see.
So sheltering isn't always, and deferring isn't always wise. It can be, but it's not always
That's
wise.
that, because I'm trying to figure out the strategy, right? Like, what's the key to avoiding the taxes? Because it's like the plague. To me, taxes are the plague. So it's how do I avoid, what would be your advice to maneuver a situation for, as an investor, a long game, to pay the least amount of taxes?
It depends on the circumstance. So,
Right.
So first of all, there's a difference between managing your tax and managing your banking relationships. The last thing that you want to do as an investor is show all these losses, okay, and then have
we were talking about that.
Then go to the bank and you have no borrowing power, because you showed all kinds of losses all the time, offsetting your income. You were taking your fee. It is better in some situations, and I'm a firm believer. It's better to calculate your taxes into your gain. The same way I calculate my real estate commissions to my real estate agent into my gain.
Right.
I calculate that in. I'm a firm believer in pay your taxes, move on to the next deal. I don't want to have to solve yesterday's problem, okay, on tomorrow's deal. Mm-hmm. That can be, in my view, it could be very much a gimmick, okay? Because what happens if you lose? What happens if what happens
gamble.
What happens if you gain on this transaction, and then what happens on the next one when you lose? You get yourself in a circumstance. Let's do every deal. Let's do this deal. Let's pay our taxes and move on. Now, I can understand the fact that people might want to defer. There are certain situations where that benefits, but I say take your medicine.
What happens if you defer to the point of death?
Well, I mean, it depends on what kind of business entity that you're dealing with. Number one, okay. If you defer to the point of death under today's law, okay, then your heirs get a step up in basis, meaning that essentially they get to inherit your property. Okay, if you own it individually, they get to inherit your property, and their basis ends up being the basis at your date of death, or maybe an alternative time. But let's say this: what happens if your real estate assets, are held in a business entity? That's
what I was going to ask you.
Okay.
So just under an LLC.
It's
even if you're the only owner of that, it's a single member LLC. You're saying, so keep going.
So if you have if those assets are held in a business entity, business entities may be disregarded for tax purposes. Okay. Mm-hmm. So first of all, for federal tax purposes, but if you have an entity that is regarded, okay, that is considered a separate person than you, then you do not receive the same advantage of step up in basis as you would if you owned it individually, or an entity that is as though you owned it individually.
So you're saying an LLC would fall under that, or you're saying it would be a different
I'm saying that a single member LLC that's taxed as an individual would more than likely fall into the category of...
They would get the step up?
You would get the step up because the government doesn't recognize that entity.
It's all going under this. Okay. But if you're filing separate, well, I won't go there yet, because I was going to get into the different shelters that there are outside of the LLCs, like different corporations and whatnot. Mm-hmm. Let's go there. So what are the different, entities or umbrellas, if you would, that an individual should or you would encourage them to have? Obviously, it depends on if you're. I would assume if you're working full time, you have W-2, but if you're, you have separate business endeavors, or what are the different options that are out there for?
Well, okay, so this is a great area to discuss. Okay, great area to discuss. First off, I would never recommend any of my clients to ever own real estate in a regular corporation or a subchapter S corporation.
Okay. Getting
money in and out, getting the process in, that's not the proper structure, in my view, for a real estate holding entity. Okay. And I could discuss why, but it would be too complicated for this moment and this time. Okay. So individually, you can own real estate as an individual, or in an LLC, or in a partnership, or in a family limited partnership, or a family LLC. There's all kinds of choices that we make here. Okay, so you have to ask yourself certain questions. Like if you have a person who's a business owner, okay, but they also own the real estate where their business operates out of, they may have a desire to have 2 separate entities because you have for asset protection planning strategies. Okay, there may be needs that are over and above. Okay, protecting their assets may be over and above any tax-driven strategies that they may have. Okay, and so you have to really weigh in what is the business purpose here, and what are the tax strategies, and do I want, is the purpose of my holding this real estate to pass on wealth to the next generation, to my children or their children? So once you define these different categories for yourself, it's different in every situation. Then we can start planning which entity is right for you. That's a good time for it.
So would you ever advise someone to own it individually?
Yeah, I don't mind owning real estate individually. We all own our homes individually. We should anyways.
Well, you're not protected, though, in that realm, though, right? So if somebody sues you, aren't your personal assets on the table?
Well, yeah. So, I mean, first of all, I'm saying that stay out of lawsuits. Okay. Okay.
Yeah,
great advice. Great out. Yeah.
And don't get involved and that's why you don't want to get involved in real complicated business. Okay. Complicated business structures. I believe simple is better. But as you're saying, look, if I own my home, first off, you could put it in your business name. When you do that, you're going to lose the benefits.
I was going to say, don't you lose that opportunity with the capital gains as a primary residence?
Yes, you lose those opportunities. And so that's not something that you would typically want to do. Now, some people want to put their primary residence in their children's names, or they might have some health issues or reasons to do that. But let's face it, most all home ownership in the country is under your individual name with your spouse.
Right.
Okay. And that's the proper structure for it. You should carry insurance. Okay. And that's the proper structure for it. And now, if you do put your real estate in an LLC's name, then you have to live by certain rules. Okay. Like separate bank account. Mm-hmm. Okay. Not to commingle funds between your LLC and your person. Because if you would be sued, eventually the lawyers who were suing you would try to say that the LLC was a farce, that the person who really owned the real estate was you, and you just put it under an LLC's umbrella. But look, they used all the money went to the same place, all the money went to the same bank account. They used the funds as, for their own personal interest. There was no real LLC. It was just,
well, that would be for like an individual owning their private or their personal residence under an LLC. But so for like a multifamily, right? Mm-hmm. You wouldn't put that under the individual as well, though, would you? I mean, because now you're dealing with tenants and, tenants are.
It just would depend. Okay. So if you're dealing with a multifamily, or you're dealing with a situation where you have investment properties, then by all means, I would recommend using an LLC. Mm. Okay. But while you're using the LLC, I want all your rental payments made out to the LLC.
Right.
I want the expenses for the LLC to be paid out of the LLC's bank account. Mm-hmm. I want all the taxes for the LLC to be paid out of the bank account, the insurance to be paid, and then distributions to come in a ordinary fashion, in a fashion that shows that this LLC is actually separate individual than me as a person.
Right.
So that's the objective. There's no point in forming an LLC and not adhering to the strict principles of having it as a separate corporation.
Right.
Because then it's just going to provide you no benefit, the benefits you're seeking.
So you're saying, so if an individual, so if like, for example, myself, I operate totally separate, right? So I have my LLCs and I have my personal. Now, with that being said, and I don't live off of my rental income. Now, if I did and I started using that rental income and those business funds for personal use, would that give a tenant the ability to poke a hole through the guise of the LLC, leaving me more vulnerable?
I would say the answer is that it would give them an argument.
Okay.
Okay. And that is whenever you're involved in the dispute, the last thing you want the judge who's making is to hear an argument that is against you.
Yeah.
So you really broach on a legal matter, and I love to leave legal issues to the lawyers. But what I will say is that if you manage separate accounting for your LLC, and then you take a distribution for yourself individually, go spend that money that you distributed out to yourself into your personal bank account and do whatever you want with it.
Right.
So I think that most good lawyers would agree. That's the way that
That's the way
you want that's the way you want to handle it.
Okay. So like in terms of write-offs, I know this could be a
Whole other episode.
well, so
With referencing, were you going to say investment properties?
yeah.
Like, is there a cap now, how much you can write off with the interest on a mortgage you might have on it, or a cap on the taxes that you can write off?
Well, certainly. I mean, you have multiple. This interesting thing about real estate is this. Yeah, sure. If I want to, it used to be that if I got a home equity loan, I was able to deduct all the interest, okay, primarily up to $100,000, what have you. That as an itemized deduction on my tax return. Okay, now by and large, for the most part, expenses that are not related to the real estate. Okay, used to be able to go buy a car. Okay, I got $100,000 of equity. I'm going to go buy a car for $60,000, and then I could deduct that interest as if it's real estate interest. That's the way the tax code was written.
Yeah.
Now it's not that way. Okay, so in order for you to take a real estate interest deduction, it has to be from the acquisition of the real estate or the improvement of the real estate, even if real estate is secured by the loan.
Okay.
Does that make sense?
Yes.
Okay, so essentially there are limits now.
So the acquisition, so just initially, the first year. So that's the only
let's
time.
say you borrowed $100,000 and you built a great room on the back of your house.
Oh, okay.
But if you borrowed $100,000 and bought yourself a $100,000 vehicle, you're not afforded to the same deduction.
Yeah.
And so, yeah, there are limits. These types, where you get the best bang for your buck in real estate is your cost recovery system and your depreciation. We go back there again. Because there's a revenue ruling from the IRS, okay? It's basically a court case. It's called Hospital Company of America versus the Commissioner. Well, what Hospital Company of America versus Commissioner says, there was this corporation that owned hospitals, and they wanted to break out, okay, all this property to be personal property rather than real property. But the IRS said, no, that's 30. You have to depreciate everything over 39 years. Well, what the judge said, the tax court said was, no, that's not the situation. And they said, if you get an engineering study done, and that engineering study breaks out what is real property versus what is personal property, then you can take the personal property and depreciate it over a useful life of 5 or 15 years, and the real property then will be depreciated over 39 years. So that's a big deal for people.
Oh yeah.
That's a big deal. So if you're looking to accelerate your depreciation, you're very well served by having an engineering report done and then tapping and separating those assets out in that fashion.
So commercial's 39 years depreciation.
Mm-hmm.
So it wouldn't be advantageous to buy a 5-unit in terms of depreciation. It would be advantageous to have the 4-unit because it's not considered commercial.
Well,
because 1/27th would be bigger than 1/39th.
Well, sure. So essentially, when I think of commercial real estate, I think of
Like a retail, like an
plazas,
office. Yeah.
yeah, things of that
Okay.
nature. So absolutely, it could be you want to. I mean, but if you look at it, let's say you're talking about, let's talk about real dollars and cents here. Let's say you're looking at $1 million acquisition. So you take $1 million, you divide it by 40 years. 39 years, right? You're talking about $50,000 a year in depreciation. You take $1 million and you divide it by 27 years, and let's call it 30, round numbers. You're talking about $35,000 a year in depreciation. So your real difference is $15,000 a year. Okay, is that 15 going to be
A make or break?
Is that going to be what? Maybe it will on certain transactions because you have your cap rate. Okay, how long am I going to recover my money?
Right.
Okay, and so essentially you have to look at these things and you have to they're all judgment calls. There's never one right answer. Okay, it's always facts and circumstance driven, and it's always, everyone has different income levels, everyone has different, different situations. So you have to look at those.
Yeah, I had an investor. He was older, and he owned a property for 26 years. And he was getting ready to liquidate because he's like, I already took advantage of the depreciation. I'm ready to liquidate next year. Do you have clients that have properties for that long, and their strategy is to sell it on the 27th year?
I think it's silly because
I guess I didn't understand why that was his strategy.
it just sounds like I don't know. I can't really understand that because let's say he bought that real estate when he was 40. He's now 67. If he sells that now, he has to recapture all the depreciation that he took over that year, and then he has to pay a capital gains rate of 25% on anything he sells over and above it.
Yeah, I didn't understand why he would do that.
And if he just held on to it, he could pass that on to his heirs. They can inherit it.
Okay, so I'm still getting the concept. So the recapture means you got to pay it back. You're taking a deduction now, so when you sell, you pay it back.
Why is that? Why would they let you take the deduction, over all these years if they're just going to say, well, we let you do it over the course of the last 27 years, but
and
now
there's
you
just random numbers. Like 27 is such a random number.
That's
there's a reason
question.
why it's 27. I can't remember why.
Well, how else? Let's say you borrowed money.
Yeah.
Okay, if you borrowed money, you're paying back your loan. If you were never able to deduct, you're not allowed to deduct your loan payment.
Yeah.
Just the interest portion.
Yeah.
So if you're not allowed to recover your loan payment, you can't cash flow.
Yeah.
So you need to recover the cost over a period of time that is similar in nature to your loan period.
Yeah.
30-year mortgage, 27.5-year. You see.
So can you add that back? So how does depreciation come into play with your cash flow, right? So are you able to, say, for example, you make 20 grand on a property annually. Say you took $20,000 in depreciation that year on that property. Would that be a net zero in terms of your taxable obligation with that property? And if so, and this might be a lender question, they're able to I believe they're able to add back that depreciation on that property.
Sure.
Okay. So say if you took a loss on that property only because of the depreciation that you took, they would be able to add that back in, right? And would show as a positive.
It depends.
Okay.
It depends because you have to look at it this way too. If you have an operating business entity, okay, that takes a loss, okay, that might be added back in, but so would the income for the rental property that you're showing as well.
Right.
So again, it's always to your advantage to show a profit. Banks love profit. Okay.
Right.
But so it ends up begging the question, why are you in this real estate business? Okay. Are you in this real estate business so that you can generate paper losses to offset your ordinary income from your day job? Okay. If that's what you want to do, cool. Let's do that. Now that's your situation. Let's do that as much as we can until you're done making the money you are in earnings today. Okay, because then you don't have a reason to offset your primary income.
Right.
Okay, and then when you're retired, now let's start to figure out ways to show income.
Right.
You see?
Yeah.
Because now you're not making, hundreds of thousands of dollars a year in your day job. So now now you're deferring and then having this lower tax rate later.
So, and that comes into play with the, when we were talking about the 1031s and where you see taxes going, do you have anyone rolling over? So for example, their traditional IRA, right? Do you have them rolling it over now into a Roth because you're projecting that taxes are going to be higher down the line. So why not pay the tax now on that and have tax-free money down the line? Is that a similar strategy as it relates to like a
Well, it depends.
property?
I mean, yeah, certainly when somebody retires from their day job and they're not earning a significant salary anymore, it could be to their advantage to roll over their 401k and convert it to an IRA or convert it to a Roth IRA.
Mm-hmm.
But what happens in that situation is you're paying income tax on the rollover total value of the
Where you're
rollover
at now.
IRA now.
Yeah.
Okay. I've had situations where I've witnessed clients do that and it really worked well for them. But then what would have happened if you did that in December? Okay. What if you would have rolled your what if you would have had a 401k worth $1 million and you rolled it over into an IRA in December and you paid taxes this year on $1 million, but now your portfolio got slaughtered and is worth $500,000. You see?
Is that what happened?
The market got blasted.
No, I know. Was it half? Like half?
Oh, you're saying did it happen to somebody?
It could have, depending on your equity,
that makes,
like what you were
that gives
invested
me
in.
pains.
So you don't even have it. So you're paying the tax on the.
So then in that situation, you would have to go back through a reconversion. Okay. It just becomes, it can be very complicated. So, my advice to clients, let's try to keep it simple. Okay. Let's keep our business structuring simple. Let's keep our investments simple. Let's look at our businesses, what we're trying to do. Let's look and go in with a profit motive. Let's try to make money. Okay. And then once you make your money, let's pay our taxes on our money. Let's be compliant. Let's do that. Okay. And then let's go do it again.
Yeah.
Okay. And let's do it as many times as we can. Let's find a formula that works.
Yeah.
And let's be smart. Okay. Let us tailor a strategy for your circumstance, for what you want to do, rather than trying to, I read a book about this guy who's in real estate. Here's what he did. Well, I don't know what his situation is. I mean, maybe that worked for him.
Yeah. Right. Everyone's situation is different.
Yeah.
Yeah. Well, that hour sure goes by quick. And I could sit here and we could probably talk about 10 million more things, and we probably will afterwards. But thanks for coming on today. And
Appreciate it, Ant.
yeah,
Wonderful. Thanks
for making episode 18 so great.
Hey, listen, that was my goal. I wanted to make this episode the greatest of all time.
Well, I think we did that.
That's what the goal was.
That's what it is.
All right. So
Thanks,
thank you
guys.
so much. Very nice meeting you today. And Michael, my guy.
That's right.
And thanks for watching Cashed In.